In this video, Jim Cramer addresses the recent market rally amidst growing concerns about potential economic corrections and recessions tied to governmental policies. Cramer notes a shift in market sentiment affected by Trump's inconsistent messaging and stresses the need for clear communication from the administration to stabilize the market and improve business confidence.
So why not call the bottom? Because I'm worried about something that Treasury Secretary Yellen said yesterday on Meet the Press. First, Yellen told us that corrections are healthy. All right, that's simply not true if you own stocks. If you've got your retirement money in the S&P and it drops 10%, that feels incredibly unhealthy. Not just for you, but for the entire economy, because people tend to spend less money when their wealth vanishes overnight. Corrections are unhealthy if you are worried about tipping into a recession, and most business people I talk to are worried about that. Then Yellen went on to say that he knows from being in the investment business for 35 years that corrections are not only healthy, but they're normal. What's not healthy, he tells us, is, quote, straight up, that you get these euphoric markets. That's how you get a financial crisis, and, quote, interesting perspective. Goes on to say, quote, it would have been much healthier if someone had put the brakes on in 06, 07. We wouldn't have had the problems in 08, end quote. I kind of like that. But let me parse this with an understanding that I've been in the business 45 years. And as much as I would like to say that makes me better, more seasoned, smarter, I'm not going to do that. Sticking around for a long time simply doesn't give you the expertise that you might think it should. For example, when Yellen says corrections are healthy and normal, he's talking like all corrections are the same. That couldn't be further from the truth. Most corrections are not like the one that we have for the last few weeks. You can get a correction because the Fed changes its stance, the market got too exuberant, foreign problems have been exported to our shores, stuff like that. But that's not what we're talking about here. He knows that? Not at all. Right now, people are worried about a recession that's caused by the President of the United States. It's a correction that has nothing to do with the federal government's transition to a more prudent spending philosophy. We Americans want that, as we are worried about the government borrowing more than it can afford, worried for our kids, for our grandkids, who are going to have to pay for the federal government's profligacy. Instead, this solve had everything to do with a lack of consistency and a lack of certainty, something that should be obvious to Mr. Yellen for 35 years in the business, as it is for me after 45 years in the business. If President Trump had coolly and calmly laid out a strategy for evening the scales with our trading partners, I think we would have gotten a lot of buy-in. We're the only country that plays fair on trade, and that cost us countless jobs over the years. Foreign countries subsidize all sorts of their products, and then they dump them on our markets at cut-rate prices. China's the king of this. They're hardly alone, though. The numbers speak for themselves. For decades, our government let it happen because these countries were sending us lots of cheap stuff, and who doesn't like cheap stuff? But if you get to the point where Germany, South Korea, and Japan have saturated our auto markets, more than 50% of our vehicles are imported, for heaven's sake. No, this is not right. No other developed nation simply gives away their markets like that. That's infuriating. It's awful. It must be stopped. So I think Trump's core thesis is right. Our trading partners have taken advantage of our country for decades, and it's worth trying to set that right. But, and it's a very big but, Trump's approach has been way too erratic. It's terrified both the stock market and the broader economy, not just the stock market, the broader economy. Most of the substantive tariff news comes in the form of postings on Truth Social. They come fast and furious. They're incredibly important. They're incredibly contradictory. These posts involve hundreds of billions of dollars, if not trillions of dollars, and more importantly, hundreds of thousands of jobs, including yours. The mercurial postings, the scattershot approach to trade policy is the proximate cause of the correction. I asked you, Mr. Secretary, with 35 years of experience, is that normal? Is that healthy? I don't think so. So what distinguishes today and Friday from the hideous correction that perhaps mercifully ended Thursday? Very simple. No postings. In the absence of posts, we see the natural inclination of the market, which is to go higher. The President Trump from his first term would, I think, not call a correction healthy, especially one that he had a hand in causing, because he didn't believe what he did should hurt the stock market. Stock market matters as a bellwether for the country, not just as a wealth creator. You can gauge the country's mood from the market. And as of Thursday, it was correcting itself from a positive attitude to a negative one, from an exuberant one to a sullen one. And that's how you get a recession. A transition is only painful if you choose to make it painful. Today and Friday made me think that the president recognized that teaching our so-called trading partners a lesson and having small and medium-sized businesses do well because customers aren't scared to death are not mutually exclusive. After all, what's good for America is good for American business, which is good for the stock market. That was his philosophy in the first term. I believed it. He taught us that. It's what Wall Street thought we were getting this time, too. Now, it might be true that the old Trump created too much enthusiasm, and that enthusiasm could have led to the euphoria that Secretary Yellen mentioned. But, man, before COVID hit, he presided over a fantastic economy with great job growth, no inflation. And he did it lightly. He did it with a smile. He was consistent in the optimism and his get-it-done attitude. I miss that President Trump. This new second-term President Trump is angry. He lashes out, especially on Truth Social, and his approach is so inconsistent that it frightens all sorts of business owners to the point where they don't know what to do. They can't get their heads around this multi-front trade war. They thought they had a friend in the White House, but suddenly it's like they have an enemy who seems upset and angry with them. The president expressed his fury, and all sorts of workers from all sorts of businesses, many of whom voted for him, are worried about their jobs. They don't want to spend their money because their retirement funds have taken a big hit. Who knows what will happen next? In this environment, any sense that we might go back to Trump 1 can send stocks higher in a healthy way. That's Friday. That's today. Any uncertainty, especially the kind of uncertainty that leads us to believe the president thinks it's necessary to see the market roll over, sends us right back down to Thursday. I want to believe that the president doesn't think this correction is normal and healthy, especially if he had a hand causing it. That's why I believe that today won't be just a brief interregnum. But here's the bottom line. There doesn't need to be a transition period of pain. There only needs to be some sort of certainty to the process. If we know what the president's planning ahead of time and stopping our allies from abusing us, it makes it much easier to make investing decisions for businesses and for you. We get that, and then the correction is over. But without it, the market will have a hard time staying positive, and we'll just be glad we had 2 days to catch our breath before the next beatdown.